back into agriculture today, and we continue our show and conversation with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute, Guy Allen. Dan, Guy, as we continue talking about the grain market, what are we seeing internationally for wheat, Guy?
Well, we're expecting to see a record wheat production this coming year in 25, 26. And if you look at the USDA numbers at 808.5 million metric tons, that's up 1% from a year ago. And that's what's really sort of hanging over this market. Wheat prices have been quite disappointing here. Just to run through some of the major exporters and producers, Russia's production is forecast at 83 million metric tons. That's up 3% from last year. Exports projected at 45 million. That's up 1.5 million. Ukraine production at 23 million metric tons. That's down 2% from last year. Exports expected at 16.5, just up 500,000 from last year. Significant increase. The big mover in there is probably the European Union at 136 million metric tons compared to 122 last year, with exports at 34 million. And keep in mind, the EU puts a lot of that wheat into that North Africa, Middle East market and competes pretty head-to-head with the U.S. Canadian production at 36 million compared to 35 last year. Exports unchanged. Australians at 31 million metric tons compared to 34 last year. They've had some dry weather, particularly in the southeast of the country. Exports down 2 million metric tons to 23 from 25. The Argentine crop, it's up about 1.5 million at 20 versus 18.5 last year. But exports are expected to be up 2 million metric tons to 13 versus 11 last year. Now, the world's biggest wheat producer, India, they're forecast at 117 million metric tons, which is up 3% from last year. But their exports are basically just 250,000 metric tons, bugger all. Food supply is a big issue there, and they want to keep that commodity in country, and they're concerned about that. The big unknown and wild card in wheat is China again. USDA has that number at 6 million metric tons compared to 3.3 last year. I think we might struggle to achieve that number, but that's what the USDA has plugged in. A little dry weather in China may push that a bit. The key thing is, look, with wheat ending stocks at 25%, for major exporters, we were looking at 3.6% for corn, wheat at 25%. It's pretty darn comfortable. And we're starting to see wheat in a number of places around the world pricing itself into the feed ration as it would. So, look, as I've sort of mentioned before, corn's going to be the leader on any movement in wheat prices. And wheat, I think, is going to struggle to move higher.
Guy, if I can just add in real quick, Shelby, I saw news reports out of China that the government was sending out information to the farm level to try to come up with whatever mitigating practices they could to try to save wheat in the field. So there's an issue there. Would they come to the U.S. or they go to the general market? They'd go wherever they had to, unless there's a trade, what they call TRQ, a trade rated or trade required quantity. So we'll see how that works. On the domestic, go ahead.
They'd probably go, just because of the freight situation, they'd probably go to our neighbors down in Australia just because of the freight rates. That said, freight rates are fairly cheap right now, so we're not at a huge transportation disadvantage on that.
Yeah, quickly on the domestic side, the USDA projected lower exports for the next marketing year, 820 million bushels this year, 800 next year, and along with that yield estimate of 51.6 bushels per acre, which the Kansas Wheat Tour seems to be talking about as well for hard red here of late, at least that in early days, that's what they were doing. End up with a stocks to use figure of 47%. So when you get that high, it means for every 100 bushels that you use, you have 47 of them sitting someplace in a bin. So that's rough. And for hard red winter, uh, when we come here to May 31st, they're projecting ending stocks of, well, 401 million, but basically that's a 62% stocks to use. So man, for every 100 bushels of hard red that we use, we've got 62 sitting in a bin someplace. So kind of an overburdening supply situation working against us.
What are we seeing for the soybean? Excuse me. What are we saying for your soybeans?
And I'll take a shot at that on the domestic side. The big issue with the soybean balance sheet is that in the prospective plannings report, we lowered projected acres down to by about 3 million, 2.5 to 3. So 83.495 million, or yeah, 80, about 83.5 million acres of soybeans. Take that times record high yield also for beans, 52.5 bushels per acre, and run that through a balance sheet. So you end up with something that's actually moderately tight, 295 million bushels. And that's driven mainly by lower acres, I think. And of course, in my own thinking, you look at that and you come back and see that 52.5, if we have dry weather, especially for soybeans in June, in July and August, then you can rightfully ask the question, well, what happens if we get, instead of 52.5, we get 51 or 49.5 or something? Well, you do end up and you get stocks closer to 190 to 250 million bushels, and prices in that, historically, in that type of situation, closer to, instead of 1025, more like 1150 or 1250. So again, for soybeans as well as for corn and these other crops, again, what happens this summer and in the heart of the growing season, June, July, August, is gonna tell the tale on where we go on these crops domestically.
Guy, what are we seeing internationally?
Well, internationally, hard to paint a too optimistic picture. I just, going down to the bottom line, looking at ending stocks for soybeans, we're unchanged to slightly higher on this coming marketing year versus our current marketing year at 25%. Plenty of soybeans out there. Just to sort of highlight, Brazil is expected to carry in a record 33 million metric tons of soybeans this fall at the start of our marketing year in September. That's 3.6 million more than last year. That's going to compete against our new crop soybeans. So it's going to be a slow shift in logistics from the Southern Hemisphere to back to North America and the U.S. So it's it's going to be a challenge with that big carry out. Just keep in mind, Brazil has significantly increased its domestic consumption of. Sorry, forget that was corn. So just looking at the other big swing on the imports, looking at China. China USDA has their imports, or sorry, their crush usage up 4 million metric tons to a record 112 million metric tons of crush, which is quite optimistic. But I think, hog numbers are recovering and very much possible there. So imports from China, particularly if we get that trade relationship worked out, could be a little more optimistic. But I think it's going to be coming a little later in the marketing year next year, not up front and early on that.
And if I can add in on that, Guy, for soybean oil, we just keep chugging along at amazing levels of exports. Do you have any comment on that? I think the impetus that coming out of Asia, isn't it? Largely.
Yeah, the export has been very optimistic for soybean oil. Just in the last few days, there was a biofuel renewable diesel issue that came out, which sort of weighed on that soybean oil market pretty heavy. I don't recall the exact details of that, but that as we get changing regulatory requirements on that biofuel situation, that's going to have a big potential impact and swing on not only soybean oil, but also ethanol and corn prices there as well.
Guy, what are we seeing for the US dollar?
Yeah, just looking at the U.S. dollar, we've seen a bit of strength in the dollar situation in the last few days or over the last month. We were back up above 100. We approached 102 a couple weeks ago. Now it's at about 100.8 on the index. The good thing is we're seeing some of our customer currencies see a bit of strength in their values there as well. And that's probably the most important thing is that they're seeing value with the strength in their currency against the US dollar. So they're more likely to buy a bit more commodities.
And you,
Just looking at transportation, I touched base on that earlier. We are seeing a bit of nearby weakness in the dry bulk index. Um, we're at historically fairly low levels on that. If we start seeing some export sales, particularly to China, the first thing I think we'll see that in is probably in the freight market. We'll see that indication probably quicker than what we'll see it in the underlying commodity market. So I continue to keep a good eye on that, but being a bit more optimistic in the whole trade relationship, particularly if they get some of these tariff issues settled down, it'll help bring those freight costs back up a bit, and that's not a bad thing for commodities. That means we're moving dry bulk goods.
Dan, excuse me, Dan, Guy, I appreciate both taking the time to join us today.
Thank you, Shelby. Take
Thank
care.
you.
That was K-State Grant economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now on Agriculture Today, but when we come back, we'll be joined by K-State meteorologist Chip Redmond with this week's weather update.